just business news, we're news for business people. Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people. Good morning, you're watching Bloomberg Quint Live. I'm Menaka Doshi.
And I'm Neeraj Shah. Good morning, Meenka. Good morning, Irana. Happy Children's Day. Even I'd forgotten it is one today, November 14th.
Okay, happy Children's Day to any children watching us this morning. We are out of that league.
That count is what? 7.
Right, good morning, everybody. Let's get straight to the headlines. Britannia, Petronet LNG and Vakrangi will make it to the MSCI Global Standard Index from the 30th of November. Apollo Hospitals will move to the MSCI Small Cap Index. Airtel will sell another 3.5% in Bharti Infratel in the open market today, bringing its holding down to 40% in the tower company. Sun Pharma, Eicher Motor and GAIL are 3 nifty earnings that we are watching today. And shoemaker Khadim India will list on the bourses.
For all football fans, keep in mind Italy is not qualified for the Football World Cup for this time around.
20 years or something like that.
Yes.
Man,
So
heartbroken.
that's some headline if you're an Italy fan, Italy football fan, yes. But straight to the trade setup for the day, and it's not looking, well, it's not looking ominous really, but it's not looking all that hunky-dory for the markets as well. We'll start off on a flattish note. The SGX Nifty is shown its hand. The broader markets, the global markets are a bit of a mixed bag. But just look at what happened in trade yesterday. It's pretty much a similar pattern that we've followed for multiple days in the last few. The breadth worsened in late trade, and while the volumes may have been lower than average, a lot of biggies corrected in the last half an hour, 45 minutes of trade. So while you had HDFC correcting in a big way all through the session yesterday, stocks like Reliance, ITC and a couple of others which are heavyweights started contributing to the downside in the last 40-45 minutes, and that led to the index closing in at the lowest point of the day. Is that worrying? Remains to be seen. Can there be a bounce back? Sure, there could be. But if you just look at global charts across the board, the last 1.5 odd months, there has been a bit of a pause and a pullback into all the key emerging markets. So maybe this is not just an India-specific thing, and for difficult to figure out if indeed there could be a bounce or no. But there is a bit of a pause that has happened in the global market rally for sure. Within our markets, while a lot of pockets corrected yesterday, I thought special mention should be made of the Anil Dhirubhai Ambani Group pack. Almost all the stocks, not just yesterday, for the last few days have been correcting. We've spoken at length about Reliance Capital and how that has fallen from 590 to almost 640, 650. But in yesterday's session, fresh lows for Reliance Communication, Reliance Naval and a few others. So just watch out for this basket. It's not looking very pretty. The kind of selling that we're seeing on high volumes and fairly high delivery percentages for a bunch of these Reliance ADAG group names. However, those are not the, those may be the stocks to watch, yes, but I think in today's session, in terms of news, the stocks to watch, I think Bharti Infratel, and by that extension, Bharti Airtel as well, because Airtel will sell about 3.5% stake, in Infratel about 415 odd rupees per share. So let's wait and watch if indeed the deal happens at a small discount to the current market or the closing price yesterday, and that is a bit of a bearing on Bharti Infratel. We'll talk in detail about the MSCI additions and deletions, but I just brought out 2 or 3 names which I thought were interesting. So in the small cap index, Bombay Dyeing, Tejas Networks, Vakrangi Software comes into the MSCI Global Standard Edition as well. So that's an interesting name to watch out for. Large cap IT name, but now finds its way into the MSCI Global Standard Index. So watch out for that, and we'll talk about that in detail. And I thought 2 results which stood out. One of them was Repco Home Finance, a clutch of names. More disappointments today than positive surprises. But Repco Home Finance, not a bad set of numbers. Asset quality improved on a sequential basis marginally. Watch out for this one. And we've been talking at length about how some of the real estate names have been doing well on the bourses, but the numbers have disappointed, quite frankly. The last 2 or 3 that have come out. Suntech was okay, but the Phoenix Mills was ho-hum, and Marathon NextGen really disappointed. It was a poor quarter on all fronts. Profit after tax down 50%. It's a stock that's done really well of late. Let's see if there's a bit of a correction on this one as well. But just before I move further and tell you what's slotted on First Word, as I said, I think it's important to take stock of what MSCI has done. It's recalibrated its global standard and the small cap indices, and a host of Indian companies have obviously made the cut. Some have lost out as well. Darshan is here with the details of the winners and the losers. Darshan, good morning.
Good morning, Neeraj. So these are the 3 counters that come into the Global Standard Index: is Britannia, Petronet LNG and Vakrangi. Most of the brokerage notes that had come out predicting what could happen had predicted Britannia and Petronet would come in. Vakrangi comes in as a surprise, but remember, Vakrangi is no small cap. It's a 30,000 crore market cap. It's as big as Lupin now. What misses out is Apollo Hospital. So what happens is Vakrangi gets deleted from the small cap index and moves to the large cap, and Apollo gets deleted from the large cap and moves into the small cap. These changes are effective of 30th November. So from whichever funds benchmark their portfolio against the MSCI, from now till 30th of November, they will have to make the changes accordingly. So if they don't have Britannia, Petronet or Vakrangi, they will have to buy it. And if they have Apollo Hospitals, they will have to sell it. The details will come in terms of the weightages over the next few hours. A lot of brokerages will come out with notes, but these are the big ones. These are the large caps. Lot of changes in the small cap also. There are 30 additions and 10 deletions. So these are the additions that have come in. Some of the good ones that you can see: CDSL, Cochin Shipyard, there is Eris Life, there is IDFC, which was supposed, which the street had predicted would come in the large cap. It's coming into the mid cap. There's Nesco, there is Time Technoplast, Shankara, Rain Industries. These are all the marked outperformers. In terms of, it's more surprising in the deletions. Adani Transmission goes out. Very surprised that Future Retail has gone out. Kushal Trading, there were issues as far as the balance sheet was concerned, so that was expected. L&T Finance and TVS Motors, I'm very surprised that these are 2 large companies. They didn't find their way into the large cap. In fact, they were deleted out of the small cap also. So these are the big changes that have happened. But remember, there'll be other counters also because of the changes that are there. The other companies' weightages will also change. So there will be inflows and outflows on them also. We'll try to get you some sales note as then when they come in, but we'll try to give you an indication of how much outflow in terms of money terms that will happen in the 3 additions and the deletion and some of the other counters as the notes come out.
All right, those will be interesting numbers to watch. Thank you very much for that, Darshan. Let's take a quick look at what's on First Word this morning. As Airtel looks to sell another 3.5% stake in Bharti Infratel, we take a look at how that might change the telecom operator's debt profile. With the CPI numbers out yesterday, a quick look at the macroeconomic indicators in India and whether that gives the RBI any room to cut rates next month. And no prizes for guessing what Ira's answer would be to that. And with the Bharat 22 ETF set to open for anchor investor subscription today, we'll look at its closest peer and how it's performed over the years to give you an idea of how those government-led PSU ETFs have done. But we're going to first kick it off with Bharti Airtel. In a continued effort to pare debt on its books, Bharti will sell 3.5% stake in Bharti Infratel, which is its tower infrastructure company. In the long run, Airtel plans to give up controlling stake in its telecom tower arm. Somit is standing by with more on what this means for Airtel's debt profile and how much more could be hived off. In the sense, I imagine how much more could be divested, right, Sumit?
Yeah. So today it is said that Nettle, that is the wholly owned subsidiary of Airtel, will be selling around 3.5% stake at 400 to 415.5 rupees, which will garner the company around 2,600 crore rupees. Now, this is the third attempt in the last 8 months for the company to sell its non-core asset to pay debt. Now, year to date, if you see, they have sold around 13.96% stake. In December, that means they have brought down their holding from 71.96% in December 2016 to 58% as of September 2017. Now, on March 28th, Airtel sold around 10.3% stake to a consortium led by KKR and Canada Pension Fund for close to around 6,200 crore rupees. Post that, they transferred 11.32% stake to their wholly owned subsidiary, Nettle Infrastructure Investments. And after that, Nettle sold around 3.65% stake for 2,570 crore rupees. And today, Nettle is expected to sell another 3.5% stake in Bharti Infratel. Now, they have sold their stake in Bharti Infratel to reduce their debt. So let's see how the debt scenario has changed for Airtel. Now, over the period, if you see on an absolute basis, Airtel has brought down its debt from 1,08,000 crore rupees to close to 1,00,000 crore rupees as of September 2017. Now, on an absolute basis, they have reduced their debt by 8,000 crore rupees. But if you see the leverage position, it is unchanged at 3 times. Now, the company's total debt to EBITDA is still at 3 times. Now, in December 2016, the debt to EBITDA was at 3 times. And as of September 2017, the total debt is again 3 times of its EBITDA. So, the leverage position is unchanged. Now, if they use the entire proceeds of this stake sale to reduce their debt, the debt would further come down to around 97,300 crore rupees. Now, Bharti Airtel has said that they have been approached by global investors for further stake sale in Bharti Infratel, and they are duly considering this proposal, and they might sell a majority stake in Bharti Infratel. So, after this stake sale of 3.5%, Bharti Airtel would have a debt of close to 97,000 crore rupees, and they would own around 54.5% stake in its tower arm, that is Bharti Infratel. So, let's see the scenario 1. If Bharti Airtel cuts its stake to 40%, that is, they would sell another 14.5% stake. So that 14.5% stake, considering yesterday's market price of Bharti Infratel, would fetch them close to 11,000 crore rupees, which would bring down that total debt to 86,350 crore rupees, and that total debt to EBITDA at 2.7 times. Now, scenario 2, if they bring down their stake to 25%, that is, they will sell another 29% stake. That will fetch them close to 22,400 crore rupees and will bring down their debt to close to 75,000 crore rupees, and their total debt to EBITDA at 2.4 times. Now, this is assuming that the company does not add in more debt to its book and it maintains the same level of EBITDA, which is a bit difficult considering the current market conditions. Now, reducing that debt would also boost the company's company's profit and loss account, as lower debt would mean lower interest cost, and that will eventually boost its net profit going forward. But then there's a big assumption that the company will not add in more debt and will maintain the same level of EBITDA to see its debt to EBITDA go down to 2.4 times.
All right, that was what's going on with Bharti Airtel. I think they've made it quite clear that they're looking to sell as much as they can, right? So, yeah. So we'll see how that one proceeds. But CPI numbers yesterday inching up.
So CPI numbers, but also, the overall broader macroeconomic picture. We get the high frequency data, and the CPI is the last of them. So we're just taking stock of what's been happening in that front. I will start with the CPI, though, which came in yesterday. So the numbers were not surprising. I mean, they were higher than the last couple of months. They were not as high as some had feared. So you got 3.58 in terms of the October CPI number. August and September were at 3.28. So, you've had a fairly steady, actually, trajectory in terms of consumer price inflation. It is moderate. It has risen a little bit, but by all standards, and particularly by Indian standards, at about 3.5%, inflation is moderate. So that is certainly good news. Just stay with that for a minute, even though we don't have the fine print. But the fine print of that suggested that vegetable prices were higher, fuel prices were higher, all predictable elements. And if you look at the core inflation bucket, which is what the RBI looks at, that was steady at about 4.5, 4.6% as well. So there has been no dramatic change in the CPI numbers. And that is, one thing, one takeaway from the macro data of the month. If you look at some of the other indicators, and we're just looking back, some of this you would have seen, but put it all together, the IIP numbers are suggesting slight improvement. No dramatic improvement, but certainly slight improvement. So total IIP was down compared to August, which was at 4.5%, but at 3.8%, it's certainly healthier than what we had seen in, say, the month of July. So that was the IIP numbers. Within that, I think, as we've been discussing here, capital goods was positive because you've gone from negative in July to 2 months at least of positive, but you don't know how that's going to play out. Volatile indicator as always. Consumer non-durables were also positive for the month with 10% growth in September. Again, a lot of this could be, destocking, restocking. So we still have to see a few more months to be able to understand what the underlying economic trends are. The PMI numbers for the month gave you a sense of static sort of manufacturing sector growth. In fact, it was lower in October compared to August and September. But the services sector, which the RBI had said is going to improve and support economic activity, has gone as per expectations. And you have seen services PMI pick up. And, that's sort of the structure of the economy right now. So the structure of the economy is inflation is moderate, growth is still patchy. We don't have a clear sense of how quickly growth will recover. And on that count, you will get the final word from the November 30th numbers, which is the GDP numbers. Interest rates, as soon as you get a CPI number, the debate on interest rates starts. So, there are many ways to look at the inflation numbers. Those who believe that a December rate cut should happen are saying that current inflation data is comfortable and can support a rate cut because you are still below 4%. Future inflation outlook, however, is not that comfortable because remember, the RBI expects it to move towards 4.5%. But even if you discount the RBI's forecast, you know that higher oil prices are going to feed in. The PMI numbers had shown that input prices are on the rise. Plus, HRA has to fully adjust. Base effect comes into play. So you'll probably move towards 4.5% by the end of the year. MPC minutes, if you go back and read the MPC's minutes from last time around, you will see that barring Ravindra Dholakia, nobody seemed to be in a mood to cut rates. And unless you get a very weak GDP number, I would be hard-pressed to understand how they would change their mind that quickly. So again, it boils down all to the GDP number.
All right. We have 30% increase in crude prices. Wouldn't that make the RBI very, very cautious about what's going on?
Absolutely.
Yeah.
Absolutely.
And what, the 10 years already at 7? A few basis points away from 7, right?
10 years almost at 7. So, even if on the slim chance that the RBI were to cut interest rates, I don't think it would. I would be very surprised if banks pass it on in any meaningful fashion. Just a quick point, there was a debate going on real rates being very high. So a lot of people, do the obvious, which is take the 1-year T-bill rate and subtract the inflation number, which is at 6.25 is the T-bill rate, and this, inflation is about 3.6. So they were, doing the subtraction and saying that 2.65 is the real rate, which is very, very high. But that's not the right way to look at it because when you're looking at 1-year forward T-bill, 12-month T-bill, you also have to look at 1-year forward inflation, which probably will be at 4.5%. And if it is, then you're at 175 on real rates, which is fine. So I don't know how much that real rate argument holds true either.
Yeah, I thought you said yesterday that you didn't believe that there was any chance of a rate cut. If at all, the December one, post that it's over because of how the bond...
I don't think... I think there's a very, very slim chance of a December rate cut. Some people in the market do. I don't believe, but, my belief is not relevant one way or the other.
Yeah.
But the point is that even if the RBI were to cut rate in a tightening liquidity scenario, I would not expect banks to pass it on in any meaningful fashion. So in terms of the actual rate cycle, I think that is troughed out.
Don't forget, all those deposits will slowly go away. Yeah. Already the route of recap has been mandated. So all of that will happen, right? So where's the scope? Where's the scope?
There isn't.
Yeah. All right.
Okay. On to the last item on First Word today, and that's the launch of the Bharat 22 ETF. Remember, open for public subscription. So today it's anchor investors, tomorrow for everybody else. Now, we just thought we'll give you a slight lowdown of what this is about and whether or not it makes sense for a retail investor to go out and invest, and how does it stack up compared to the other peer. So firstly, what is this? So it's most people would know, but here's the lowdown. It's an open-ended ETF managed by ICICI Prudential AMC. It mirrors the S&P Bharat BSE Bharat 22 index. It's got 22 stocks. 2 private names, ITC and Axis, and then the rest of the names are PSU names. Now, some things that are unique of sorts to Bharat 22 ETF compared to the CPSE ETF. That's the comparison that I've drawn right now. the top 5 weighted stocks of the Bharat 22 ETF are absent from the CPSE ETF. So the CPSE ETF does not have ITC, it does not have Axis Bank, State Bank of India, BOB. In fact, there are no banks in the CPSE ETF. So you get a banking exposure, the PSU banking exposure, if indeed you believe that there is merit out there, if you indeed go for the Bharat 22 ETF. There is a bit of an active fund management theme out here, because they have capped the stock levels at 15%, sector levels at 20%, and if indeed the weightage due to price movement or otherwise goes above these mandates, then during the annual revision, the weightages will have to be brought down accordingly. So there's a bit of an active management that's happened in this. And all the weightages are by design. They are not by default. I think the government and ICICI Prudential have come in and designed this in a particular way. It's not happened because there needs to be a particular weightage given to any particular stock. How does it and of course, remember, it's a high liquidity space, because more than 99% of the stocks in this Bharat 22 ETF are present in the FNO segment as well. So there is a slightly different design to this compared to the CPSE ETF. Now, how does this stack up compared to the CPSE ETF or even to the key indices? We just brought in 2 or 3 key comparisons before we show you the charts as well. One, on the earnings growth forecast, the BSE Bharat 22 ETF, the earnings growth forecast until FY19, FY17 to 19, we're already over halfway in FY17 or in FY18, but the growth forecast is about 16% compared to the CPSE ETF having a growth forecast of 12%. And well, the Nifty 50, 13%. Now those numbers may change for the Nifty, and similarly for the BSE Bharat 22 ETF as well. Those numbers may well change before we reach the end of the year, but that's the forecast as of now. And it does stack up pretty okay compared to the other options on price to book or price to earning or dividend yield as well. And in fact, on almost all counts, the Bharat 22 ETF stacks up much favorably. This is the PE. Look at the price to book as well. Much better compared to the Nifty CPSE, or actually in line with the Nifty CPSE, but the Sensex and the Nifty 50, the price to book much higher than the BSE Bharat 22 ETF. Dividend yield, not as great as the Nifty CPSE ETF, but better than what the Sensex and the Nifty 50 offer as well. So on those counts, it doesn't stack up all that poorly. I just wanted to end up with one chart, and there is a bit of a dichotomy here, but I just want to bring up that chart. The Bloomberg terminal, of course, throws this. This is what the returns for the last few years have been for the Nifty versus the CPSE ETF versus the Bharat 22. The red line is the Nifty and the yellow line is the BSE Bharat 22 ETF. This is total return index chart. If you look at the plain vanilla chart, then there is virtually no difference end to end between the Nifty and the Bharat 22 ETF. And that's what ICICI Prudential has, of course, shown in their memo as well. And of course, in their memo, it also shows that the Bharat 22 index has done much better in the last 3 years compared to the Nifty or any of the other listed ETFs as well, which is the CPSE ETF. But quite frankly, if you just look at what the terminal is throwing out, there is not too much of a difference or hardly any difference between this ETF and the Nifty returns. So you've got to take your pick. Because I know there's this whole debate about the total return index and why you should take that into account. But hey, let's face it, if you're investing in this ETF, you're not going to get those dividends. It's almost similar compared to the Nifty. So I would actually choose what the terminal has shown and say that the returns, the total returns that have been given by the BSE Bharat 22 ETF compared to the Nifty have almost been identical. Now, whether or not this goes ahead and beats the growth forecast because of the presence of the PSU banks and some of the other. Why not invest in the
Nifty and get a more diversified, sort of stocks?
Well, I think a bunch of people are, funds and otherwise are trying, what they're trying to do is try and take the best of the large cap presence via an ETF route and not necessarily give you a Nifty 50 ETF. Because if you want the presence of all the 50 stocks, then you go ahead for the Nifty 50. What people are now trying to do is try and do something better, which is as safe as any of the large indices, but have the potential to give you better returns. Let's wait and watch if indeed this one has the potential.
Okay, all right. That's the Bharat 22 ETF. Now, there's exactly a month to go before polling closes in the state of Gujarat. This is a state election with national implications, as it is the home state of Prime Minister Narendra Modi and Amit Shah. This time around, voters will judge Chief Minister Vijay Rupani on Narendra Modi's governance record in Gujarat and, of course, the centre as well. In an exclusive interview to Bloomberg, Queen Sanjay Pugalia, the Gujarat Chief Minister seemed rather confident of passing the test.
सत्ता में तो बीजेपी की सरकार ही बनने वाली है, सब मान रहे हैं।
इस पे कोई ज्यादा डिबेट
नहीं
वोट
है।
शेयर,
लेकिन कितनी सीटें आएगी, वोट शेयर क्या रहेगा, उसकी चर्चा हो रही है। लेकिन मैं आपको बताऊं, जिस तरीके से यूपी में कोई मीडिया मान नहीं रहा था, सब लोग कह रहे थे कि किसी का सपोर्ट लेना पड़ेगा, और मायावती ने पहले कह दिया हम सपोर्ट नहीं देंगे। महंगाई नहीं था फिर भी कह दिया उन्होंने। उसी तरह से दूसरे दिन अखिलेश ने किया, जरूर पड़े तो हम मायावती के साथ बैठेंगे। फिर भी बीजेपी ने अकेले 325 सीट प्राप्त की। उसी तरीके से गुजरात में भी अब जरूर देखना 150 से ज़्यादा सीट आएगी। 3/4 मेजोरिटी से हम चुनाव जीतेंगे।
All right, that's an exclusive interview that will be playing out tonight, this morning rather, at 10:30 a.m. And here's my stellar contribution to First Word.
Hey,
I'm sorry, I'm in a New York state of mind this morning because the New York Times has just reported. I don't know, did you watch Breakfast at Tiffany's?
No.
Ira, say yes, please.
Yes.
Oh gosh, now you have the chance to play Audrey Hepburn. Tiffany's, in fact, has just opened a breakfast cafe. I did send our producers a picture. I don't
It's
know.
up there. Oh, man. How gorgeous.
So the next time you're in New York, you can visit the cafe and actually, in real life, have breakfast in Tiffany. And of course, Neeraj is looking very skeptically at both of us, wondering if we're going moon.
How lovely it
bad.
looks.
Yeah.
And it's not too expensive, apparently.
It's not. It's like the New York Times reports that it's
Please define
$29. Breakfast
$29.
starting at $29. Maybe that's just a glass of orange juice, but really, who cares?
It's gorgeous.
I mean, yeah, it's a beautiful cafe. But more than that, it's just the throwback to Audrey Hepburn.
Absolutely. And while you're there, maybe you can pick up a little blue box for yourself.
Oh, yeah, well, well, not for yourself, hopefully for somebody else.
Either way.
Okay, fine. Now, with that, we're going to wrap up First Word this morning and hand it back to Neeraj for boring markets.
This is a rather interesting conversation, I must say.
I think you've taken him by surprise.
Yes, you have.
Did you ever watch Audrey Hepburn?
Nope.
Can I play some music from the movie for you?
After the show. Anyways, but thanks so much. Okay, that's all that we have on First Word. But of course, stay tuned. It's a fairly exciting rest of the show that we have as well. For now, full tilt towards the day's trade. Okay, let me do that quick programming note any which ways. Later on in the show, we'll discuss M&M's stellar tractor sales with Group CFO V.S. Parthasarathy. And of course, we also get you a slice of a conversation. We'll of course ask A. Krishnan of Apollo Hospitals what's aiding the strong earnings, and get in a small chat with Swanand Kelkar of Morgan Stanley Investment Management as well. However, for now, full tilt towards the day's trade. A quick check on the derivative space. Navneet Saluja is standing by with the details. Navneet, good morning.
Hi Neeraj, good morning. Well, profit booking continues at elevated levels. In fact, first time in the last 4 trading sessions, you saw Nifty closing below the 10,300 mark, but the premium went up yesterday, almost 44 points, but no major build-up actually seen if you go by the open interest action. And similar was the case for Bank Nifty, just a mild addition of almost, premium was 104. So let's see if there is any sort of higher levels that one can expect in today's session. If you go by India Wix, now that closed above the mark of 14 for the first time since August 22. India Wix was up almost 4% in yesterday's session, telling you there could be more volatility coming up in the sessions coming by. But in terms of PCR, that fell to levels of 1.22. Bank Nifty PCR also saw levels of 1.14, clearly telling you that there was more call writing in the system. And also the put writers done for covered. If you go by the most active strikes in yesterday's session, look at this, 10,300 and 400 call strikes or open interest addition. And that's been the trend actually in the past few sessions. The out of the money call strikes have seen a lot of call writing, but 10,200 and 300 put saw unwinding of almost 7 lakh shares and 3.5 lakh shares for the 10,300 put. What are the FIs doing then? Clearly they were building more of short positions last week, but if you go by yesterday's session, some bit of covering was seen on the index futures side. They covered shorts. In fact, on the long side also some sort of unwinding was seen by the FIs. If you go by the options data as well, unwinding was seen for call longs and even for the put short, but major contracts were added for put long and as well as the call short side. In terms of stock futures, what stocks to keep an eye on in today's session, watch out for Just Dial. That counter saw a significant amount of gains in the second half of the session, but it was majorly on account of short covering as the open interest fell by nearly 16%. And I'll also be watching out for Balkrishna Industries. That counter had a good run up yesterday. The underlying was up as much as 6%, but on the future side, they've been trading at a discount on account of short covering. Let's see if there is some some bit of follow-on buying which can be seen on Balkrishna Industries today. Back to you guys.
Yeah, thanks. Navneet, just want a brief mention. Yesterday, I think we referred to a bunch of these stocks which would have entered the F&O ban, and there are a clutch of names that have done that. I think you mentioned that. It's a fairly large set of names which are entering the F&O ban today.
Neeraj, one of them was Just Dial. Reliance Communication came out, but we're still watching out for Jet Airways. Was actually in the F&O ban itself. We were mentioning that it could come out. But if you remember, in the second half of the session, there was good amount of buying, and I think that buying came in the cash side. No major open interest shedding was seen on the future side. So we'll watch out for Jet Airways again today, whether it comes out.
Okay, we'll watch out for that one today. It was a very interesting stock though yesterday's session. All the aviation stocks were, by the way. SpiceJet came out with good numbers too. Navneet, thanks a lot for that. But let's talk about the derivative space with Abhijit Pathak, Director at Definet Solutions, joins us right now on the show. Abhijit, good morning. Thanks so much for joining in. Before we talk about the index, though, since we're on the topic of aviation, any thoughts on Jet Airways? That's the one that is present in the F&O space.
Good morning, Neeraj. Jet Airways, when it bottomed out near 460, I've been bullish right from then, and I had that time also I said once it closes above 650, it'll gain good momentum, and I wouldn't be surprised as long as it stays above 650. I wouldn't be surprised if it goes towards 900, 950 in the coming months or weeks or months.
Okay, so if it holds 650, Abhijit Pathak believes there could be more in store. At some point of time over the course of the next few days, we'll ask him for a strategy, a future strategy or an option strategy on Jet as well. For now, though, let's stick to the index. And Abhijit, I'm seeing that you believe that fresh shorts in the index should be avoided. For any trader, let's assume that they're not going to do that. Is there anything that they can do on the index today, futures or options?
One thing which intraday traders can do is if let's say Nifty futures opens gap down, even if it's a 10-20 point gap down, and in the first half an hour the low is not broken, that can be used as a good stop loss to go long. But I believe 10-240, 10-250 on Nifty futures can give support, and from there we might see a intraday bounce at least. The reason I was saying why fresh shorts should be avoided is I am not seeing any momentum in the puts which are rising. They are just drifting. They are just going slowly up, and they are not going up with big momentum. So that is something which is cautioning me against taking fresh shorts.
Believe there could be a bounce, Abhijit, on the index?
Yeah, that's what. If the morning low holds, there could be a bounce later in the day today.
Led by the banks?
Yeah, led by the banks, and I'm bullish on Reliance again at these levels near 775, 875.
Fair call. Last question, Abhijit. Your stock-specific strategy for the day, I presume you have a call on Tata Communications.
Yeah, Tata Communications has been bullish. It has gone sideways, but if it goes above 700, it's a bit of a conditional call in the sense it is only on a trigger above 705, one can go long with a stop loss of 695. And if it crosses 705, it can go towards 720, it might be even intraday.
Okay. Watch out for those levels on Tata Communication is what Abhijit Pathak is saying. Thanks a lot, Abhijit, for joining in today and giving us your thoughts. Have a great day ahead. Let's move on to the commodity space. Pradeep Pandya Johnson to talk about that and to take the show forward. Morning, Pradeep.
Good morning, Neeraj. Well, markets are quiet. Whether you look at crude or gold, crude is trading marginally down. There's tight supply from OPEC and non-OPEC traditional suppliers, but then US has been able to match it quite a bit. So all eyes are on the next OPEC meeting on 30th November. That will decide whether or not the production cuts will be extended. Gold prices are also stable in a range of 1275, 1280. Nothing much is really happening there. US dollar has though got some support. Dollar is stable, but it's supported by rising yields. In fact, I think a notable point today would be the US 2-year yield hitting 9-year high. That is significant, although at the longer end there is not much of the activity, but at the short end the yields are moving up, indicating probably a hike from Fed in December is what is getting discounted now. Well, in early Asian trade, if you look at it, steel trades higher for second day, zinc is higher for third day, aluminium, copper also higher, and so is rubber. So for most of the metals today, the global indicators are positive.
Okay, for most of the metals, the global indicators are positive. Let's wait and watch if some of those stocks react accordingly. Just before we move on to the day's trade, a quick recap of what the rest of the world is doing. The SGX 50 is indicating a bit of a downside, but the Asian picture is a bit mixed. So let's wait and watch if indeed the SGX Nifty turns out to be a lead indicator or a false one at that. Okay. Let's take stock of earnings as we come to the fag end of the earnings season, the last 2 days presumably, and the set of numbers that have come out there's a slight bit of a difference from what we've been seeing the last few days. And Darshan is here with the earnings scorecard for the day. And Darshan, for a change, the red is higher than the green.
Yeah, I think you've been saying it's a lot of green over the past few days. I think the market heard you, so they've given you a lot of red today. But it is the final day today with the Nifty, at least all the last 3 Nifty companies will report. But some of the large caps have come out with decent numbers. Adani Enterprises, NMDC, you have your Future Enterprises. Among the smaller ones, you had counters like, SH Kelkar, Phoenix Mills, Dhanlaxmi Bank, which actually disappointed with numbers. Now, individually, let's take a look at some of them. Adani Enterprises, operationally strong. The revenues were up almost 20%, almost 9,000 crores of top line that came in. Profit was down almost 6%, but look at it operationally. Operationally, it has managed to do well. EBITDA was up 70% and margins has moved from 5.3% to 7.6%. So strong set of numbers. Even NMDC came out with a strong set of numbers. 40% top line growth, 10% bottom line growth. You had your margin increase that happened from 47.5 to 49 to almost 50%, and 46% jump on the EBITDA. No doubt comes on a low base, but nevertheless good numbers from NMDC. Future Enterprises also strong numbers, 19% top line growth from a loss of 23 crores. They've got it down to almost 2 crores. Even the margins have come, EBITDA growth of 16%, margins pretty much stable because the growth of EBITDA was similar to the top line growth. On the weekend, this counter has been buzzing really, but a weak set of numbers from Marathon NextGen, 50% top line decline, for 50% bottom line decline. Margins have come in significantly lower, 82%, and EBITDA has come in almost 60% lower. So weak set of numbers from Marathon NextGen. Dhanlaxmi Bank, yes, weak set of numbers. Even though the NII was up 8%, the profit was absolutely flat. The asset quality is weakening when other banks have actually managed to reduce the NPAs. They've increased it both on net NPA and gross NPA. That has been increasing, so that's a weak number. And you also have counters like SH Kelkar, which reported weak set of numbers, 9% top line degrowth, profit falling in almost to 21%. Even on the EBITDA level, 13% decline on the EBITDA. And finally, Indian Hotels reported a weak set of numbers, a loss of increasing to doubling of losses. You had your revenues down 4%, even operationally weak set of numbers, down 21%, and margins coming down to 6.5%. So these are some of the numbers, but today is clearly the day where the weak numbers overshadowed the strong numbers.
Thanks, Darshan, for all the details. And today is going to be interesting as well. During today's session, or maybe after that, some 22 F&O companies are going to come out with the numbers. And I think all the remaining results will actually come out today. So this is the list for F&O and also outside. So it's going to be an action-packed day today. G. Chokkalingam, founder and managing director at Equinomics Research and Advisory, joins us now on the show. Mr. Chokkalingam, good morning. Markets are a bit nervous. Do you think earnings season is kind of providing support at lower level? Is that the right strategy? Pick up good stocks on every decline?
I have a counter review. I think maybe in next 40-45 days till end of this current calendar year, market could be on sideways. We have seen oil going up by 40%. And normally FIs have long holidays, and this year particularly they have been very passive in the equity market. So there is a chance that majority of them may not be active in the market. And third, you have the Gujarat election that would give a little bit of uncertainty to the market. So therefore, I believe that it could be on sideways at best for the next 6 weeks.
Okay. Mr. Chokkalingam, a set of numbers that have come out. I think Darshan just spoke about a clutch of those. I want to pick up pockets within those. Let's first start off with what's happening within this specialty chemical space. SH Kelkar is but a case in point. Yesterday's numbers haven't been too impressive. I thought Deepak Nitrite disappointed a bit. Vinati Organics disappointed a bit. I don't know how closely you look at that pocket. SRF numbers, while the stock did really well, weren't the best. In fact, were a bit of a disappointment too. What have you made of the results that have come out so far?
You are absolutely right. A little bit of disappointing from the chemical space. But the stocks have already ran up, phenomenally. I mean, they are at historical peak if you look at market cap. So therefore, and also the fact is that some of these chemical prices are highly correlated with oil price. So therefore, one should wait and see for a little more correction if at all somebody wants to do any bargain buy within the chemical space.
Okay. Our social media pages have a bunch of questions. One of them is on a stock that is coming out with the results today. And we'll talk about that in a bit with our research team as well. So to ANI Bodyguard, we'll take your questions on Sun Pharma in just moments from now. But before we move on to that, Mr. Chokkalingam, a stock in focus today could well be Bharti Infratel and thereby Bharti Airtel as well. The series of stake sales that Bharti Airtel has done in Infratel. Now, how does that augur for the debt pile of Airtel and therefore for the near future for Bharti Airtel?
Bharti Airtel has already run up, and valuation wise it is not now cheap after the recent run up. But Bharti Infratel has corrected after touching almost to 390, it has corrected to 310 level. And one can play on Infratel than on Airtel because the kind of valuation we are talking about for tower business and also the balance sheet of Infratel, all that give a lot of comfort and confidence in Infratel rather than in Airtel.
Okay. Stay on, Mr. Chokkalingam, so much more to speak about. But as I said, a clutch of numbers coming out with results today. So we'll talk about all of those and, of course, the stocks and news as well. So let's get in a sense of the three large Nifty names that come out with numbers today. Somit, Darshan, as well as Yatin join in to speak about those. All three of you, good morning. Let's start off with you, Darshan, and Sun Pharma.
Yeah, so on a high base, the numbers will look, we'll see a downtick on an optical thing, but the numbers we are seeing an 18% degrowth on the top line. 6,800 crores will be the top line that we are anticipating. Profits of 800 crores and margins of 20.2% versus 38.3%. Now this comes on the back of a very high base last time because of some exclusivity products that they had. Taro has already reported numbers this time around, which was strong compared to what the street was anticipating. It's almost 20% of the top line for Sun Pharma, so that is important to watch. Pricing is an issue. Competition is an issue as far as Sun Pharma is concerned. So US revenues both on a quarter-on-quarter basis and a year-on-year basis, we are seeing a degrowth that will come in. Couple of products in which they've done a little bit of ramp up that can aid the US revenues, but there were no major launches that Sun Pharma had this time around. On the India business, it's the second quarter after the GST, so post destocking there will be restocking. So India, we are seeing significant amount of growth that could come in. And as far as regions are concerned, growth in India, emerging markets as well as rest of the world, both on a year-on-year basis and quarter-on-quarter basis, and weakness will be seen on US markets both on a year-on-year basis and quarter-on-quarter basis.
Okay, let's watch out for the big boy from the pharma pack. Thanks for that, Darshan, and let's watch out for Royal Enfield.
Clearly Royal Enfield, and we have the entire metric for Royal Enfield as well as the commercial vehicle portion of Eicher Motors doing really well. So if you look at the top line, we are expecting a very strong growth on the back of 20% plus kind of a growth as far as their Royal Enfield end of the business is concerned. Revenues are expected to grow 26%, and on the EBITDA front and also on the profit front, we are expecting a 29-30% kind of a growth for Eicher Motors on a consolidated basis. Of course, this is largely driven by the strong performance of the Royal Enfield sales, and more importantly, they had increased some prices, so on overall basis, realizations also will be quite strong as far as the standalone Royal Enfield business is concerned. And of course, because of better volumes this time, we could see a positive margin surprise for the commercial end of the business, which is basically VECV, which is the Volvo Eicher commercial vehicle entity. On an overall basis, expect a healthy set of numbers from Eicher Motors. Of course, the key facts apart from the earnings that you will be watching out for in Eicher Motors will be the kind of management commentary on the new launches, as well as what kind of a business opportunity are they looking at as far as the commercial vehicle segment is concerned in the second half, because everybody is talking about better commercial vehicle sales in the second half, and the management commentary on that is something important we will be watching out for.
Okay, watch out for this one too, and let's watch out for GAIL, because this one could come out with what, a steady quarter, Samit?
Yeah, GAIL is expected to come out with steady set of numbers. Revenue would be higher by 14% to close to 13,000 crore rupees, while net profit would rise by around 8% to 1,100 crore rupees. EBITDA would be marginally down to 1,874 crore rupees, while margins would contract by around 220 basis points to 14.4%. Gas transmission volumes are expected to rise by 4% to 104 MMSCMD. Now, in the second quarter, increase in gas transmission volumes, better petchem performance and higher gas trading profits will be partially offset by weak performance from LPG and gas marketing segment. Now, transmission volumes are expected to rise because of the spurt in the power demand and low spot LNG prices. Petchem will be doing better compared to first quarter because there was a planned shutdown in the first quarter, so volumes will be higher in this quarter. Now, LPG segment is expected to be weak because of lower realizations. Now, in the second quarter, petchem volumes are expected to be in the range of 1,80,000 to 1,85,000 metric tons versus 1,31,000 metric tons in the first quarter. The key things to watch out would include gas transmission volumes, guidance on trading volumes and petrochemical profit.
Well, we'll watch out for all of these. Thanks a lot for that, Yatin, Darshan, as well as Soumit. Mr. Chockalingam, as I was saying, we have a bunch of queries on Sun Pharma on our social media pages as well. From an investment perspective, how does Sun Pharma look, keeping in mind that the results are going to come out today?
It is a little scary to, buy large pharma. We saw what happened to Lupin, many other companies. US FDA is becoming too aggressive, and in this background, it is better to look for great value by bargain buy, because if you look at Sun Pharma, its market cap is around 5 times its annualized sales. Even if you look at consensus estimate, it's around 24 PE on 1 year forward earning. It is not cheap. So instead of buying Sun Pharma, one can look at mid-sized pharmaceutical company which are very attractive in terms of valuation and got least exposure to US, or somebody can even look at a stock like Lupin, which has been beaten down 60% from the peak and whose market cap is hardly around 40,000 crore as compared to Sun Pharma, which is around 1,27,000 crore, 5 times sales for Sun Pharma, whereas Lupin is substantially cheaper than Sun Pharma. So downside risk, according to me, in Lupin is limited than in Sun Pharma.
Okay, so that's the call on pharma sector. Well, this time to include our technical guest, Jay Thakkar, Assistant Vice President Equity Research at Anand Rathi Securities, and also Hadrian Mendonca, Senior Technical Analyst at IIFL, also joining us on the show. Hadrian, good morning. First of all, what's your strategy on the index? For last 2 days, we have been kind of trying to put a bottom in place. Do you think we have succeeded? Will you go long at lower levels?
Yeah, good morning, Pradeep. Definitely lot, going long at these levels would not be advisable. As we saw even last week, there was weakness throughout, and that weakness has been extended and spilled over even in this week. The week has opened pretty down, and yesterday's fall has actually aided the Nifty to actually create a very strong bearish candle at the current juncture. Secondly, Nifty has also broken below its 21-day moving average. So there are multiple, small breakdowns that are visible, and these are all indicating towards further downside. Now, mind you, Nifty has been making lower lows and lower highs for the 5th consecutive trading session now. So thereby what is happening, that support levels are dragging lower and resistance are getting stiffer and stiffer. So if this the fall is going to extend further, then I think 10,100 levels for the Nifty in the coming days cannot be ruled out going forward.
Okay. Hadrian, as I look at your strategies, you have a buy and a sell call for today's session.
Yeah, we are a bit bearish on the metals overall with a technical perspective, and Vedanta is a stock that we are bearish on. The stock has actually broken down from a reverse flag pattern kind of a breakdown on the daily charts. It is also closed below its 50-day moving average. So the overall setup in the short term is actually indicating that there is furthermore weakness in store for Vedanta. So we can keep a stop loss of 318 and play for a short term target of close to 308. On the other hand, Ashok Leyland is a very interesting pick that we have come up with. After falling constantly from the 130 odd levels all the way down to 108. Yesterday, for the first time, Ashok Leyland has formed a hammer pattern. And it has also taken support from its previous breakout zone on the weekly chart. So it's a combination of candlestick and support levels acting at the same time. So Ashok Leyland looks pretty interesting. Risk-reward ratio for longs is pretty in favor. So we can play for a target of 121 and keep a stop loss of 109.
Okay. And Jay, what are the key stocks that you have spotted today that you will be trading?
Hi, good morning, Pradeep.
Morning.
Well, we first have a buy recommendation on Godfrey Phillips. I think this stock has clearly provided a breakout from a downtrend line. This stock has been trading within a range, and that range is quite large. I would say rather it's forming a symmetrical triangular pattern on the monthly charts. So I would say for the positional traders, this stock is quite good as far as the risk reward is concerned, because on the lower side we don't see this stock in fact going below 1,000 levels from here on. The indicators which had gone into the sell mode had given a buy, have given in fact a good buy crossover, and I'm expecting this stock to inch towards the levels of 1150. That's the upper end of the triangular pattern. In fact, I am anticipating that this consolidation will provide a breakout going forward eventually, since the wave E on the lower side seems to have gotten over. However, for the risk averse traders, I would suggest targeting 1150. From here on, I would say would be somewhere around 10% on the upside, and the stop loss will be 5% below 1,000. So I would say the risk reward is definitely in favor of them. We've got one sell call on Motherson Sumi. I think the stock clearly has broken the uptrend line support with a sell crossover in its indicators, and post results too, we have seen that this stock has taken has faced some selling pressure at the high levels, is not able to move above the levels of 364, 65, not able to sustain at the high levels. So I think that going forward we will see the levels of around 335 in Motherson Sumi. One can go short here. The stop loss will be 362. A final buy recommendation I would have on Apollo Tyres. This in fact I've discussed earlier as well on your channel, and I would say that Apollo Tyres clearly seems to have formed a good falling wedge pattern. That's a leading diagonal pattern. Even this stock has to go down going forward, but I would say that the recent fall seems to have gotten over, at least for the short term, and since the wave E of the same has gotten over, so I think the probability of an upside increases. So at minimum of 38.2% retracement will get this stock to around 251. On the lower side, 229 will be a stop loss for this trade. So I would recommend a buy on Apollo Tyres. So 2 buy, one on Godfrey Phillips, second on Apollo Tyres, and 1 sell on Motherson Sumi.
Okay, so we have 3 buy and 2 sell calls this morning from both our experts, and I hope both longs and shorts will make money in today's session. Move on to special segment, Bloomberg Edge, where Jayesh Khilnani finds out an interesting pattern for us. Jayesh, which stock are you tracking today?
Morning, Pradeep. I'm looking out for Jindal Steel and Power. Based on the fear and greed indicator, it has given a buy signal. Now, the other interesting bit over here is that on the Bloomberg terminal, there are no analysts who have a sell rating on this particular counter. And in fact, the target price is anywhere 8 to 10% higher from current levels. So first, let's have a look at the fear and greed indicator and how it actually works. And it's a spread between 2 weighted moving averages, which use the concept of true range, and it also oscillates on a zero baseline, and hence it becomes very easy to interpret the indicator. Simply, when it turns green, you go out and buy, and when it turns red, you go out and sell the counter. Now, looking at the chart of JSPL that we have, the bottom panel shows you the fear and greed, and you can see that there are bars which are red and green in color. And as of yesterday, this has turned green, indicating that a buy signal has come about for JSPL.
Okay, and what's the kind of strike rate that this indicator has?
Very good strike rate, Pradeep, especially on the buy indicator. So if you have bought all the indications and ignored all the sell calls, the net profit would have been in excess of 50%.
That's interesting. Thanks a lot for that, Jayesh. And yeah, I did hear. So the numbers haven't been the best. I think I remember the numbers came in 2 days back. Okay, but in 2 days, I think the market digests the numbers. But I remember you saying in the morning today, it could turn out to be a pretty decent day for metals by and large. May reflect on some of the metal companies as well. So that's something that you need to watch out for.
possible. And this stock has also consolidated, is now set to move up. And this has been an outperformer, you know, no matter what the fundamentals have been or how the group's balance sheet really looks like, although they are trying to kind of improve that also. But at least the stock is an outperformer. So if you're tracking charts, one can go long.
Yeah, so just one last thing. I remember Naveen Jindal in an interview that he did with us about a month and a half ago mentioned that closer to December or January, there could be some bit of fundraising that could happen. And he believed that the fundraising could happen at a level much higher than the prevailing price then. That was probably sometime in the month of early October or late September. Now, I don't quite have a handle on the exact timeline, but let's assume it was end September or early October. The prices moved up a little bit post that. If indeed they decide to do the fundraising in December, it's just what stone's throw away, 15-20 days from that. So let's see if all of those things keep JSPL as a stock excited in the session today or over the course of the next few days.
So a lot of news reports probably to watch out for going forward. And 7 minutes to go before pre-open, but let's look at Khadim India. That's all set to get listed on bourses today. The Kolkata-based shoemaker is one of the largest footwear companies in the country, and the IPO was subscribed nearly 2 times. So Amit Sarkar is standing by to tell us how the valuations work out and if it lists at a premium. What are your calculations really telling you?
So we'll get to the calculation. First, Khadim India had raised around 543 crore rupees at an issue price of 750 rupees per share, and the issue was subscribed nearly 2 times, with most of the demand coming in from the QIB portion. The retail portion was subscribed 2.3 times, while the HNI portion was subscribed only 0.18 times. Now, the street is expecting a premium of close to 20 rupees per share, which means a listing gain of just 3%. So let's see how the valuations would stack up. Now, if the stock lists at a premium of 20 rupees per share, the market capitalization of the company would be close to 1,380 crore rupees, while price to earnings would be 45 times. Now, price to book would be 7.5 times, and market capitalization to sales would stand at around 2.23 times. Now, if the stock lists at a discount of 20 rupees per share, the market capitalization would be close to 1,300 crore rupees, while price to earnings would be 42.6 times, price to book would be 7.1 times, and market capitalization to sales would be 2.1 times. Now, Khadim is the second largest footwear maker in India after Bata India, and it has 2 business segments, that is retail and distribution. Now, it follows an asset-light business model where 80% of its retail stores are on franchise basis. The company also has 2 manufacturing plants in West Bengal and 4 distribution centers across India. So now let's see how the financials and how does the company stack up against its peers. Now, the company's revenue grew at a compounded annual growth rate of 10% over FY13 to FY17, which is subdued when compared to Relaxo, but its net profit grew at a compounded annual growth rate of 36%, which is better when compared to Relaxo. Now, the same comparable figures for Bata India is not available because the company had changed its accounting period during this time. The EBIT margin of the company was lower at 8% for the financial year 2017. Now, if you see the return ratios of the company, the return on equity was around 17%, return on capital at 25%, and return on asset at 7.5%. Now, these ratios are subdued when compared to Relaxo, but better when compared to Bata. Now, if you see the balance sheet of the company, now for Bata India, the book value per share is around 103 rupees, while Bata India is a debt-free company. When it comes to Relaxo, the book value per share is 50 rupees, total debt of 268, while total debt to equity of just 0.4 times. And when it comes to Khadim, the book value per share is 107, total debt at 118, and debt to equity on a higher side of 0.6 times.
Okay, Samit, I presume from what we hear after speaking to dealers that the debut today could well be a bit muted. It may not be a very exciting debut from Khadim.
Also, the subscription numbers were less. The HNI portion, which is most of the time which decides the premium, was also very subdued at just 0.18 times. So the listing could be muted.
Well, let's wait and watch. Thanks a lot for that, Samit. Let's wait and watch if indeed Khadim India can do better post-listing, because for now the listing seems to, or the initial sentiment seems to suggest that the listing may be a bit muted. Okay, Mr. Chokalingam, any thoughts on Khadim?
In fact, we have advised our investors to apply only for a possible listing gain. I agree with your team that it is quite costly, but still little comfort is there for possible listing gain because its short-term debt is 0, long-term debt is quite small, and also in terms of PE multiple, it is steep discount to a company like Bata. So considering these two facts, I believe there is a possibility of some marginal gain on listing. But if a gain is quite significant, one should book out and get out of the stock.
So, Chockalingam, do you track Adani Enterprises? Results were actually operationally strong, margin expanded, EBITDA moved up by 70%. Although this stock has been buzzing for a few days or other weeks now, this could also have been because of Gujarat elections and not really a reflection of what's happening fundamentally. But what's your view on fundamental side, and how do you see the result?
Overall, last few quarters of performance is quite good, but the stock has already played out. It has risen phenomenally in the last 6 months. So unless there is some steep correction, I would not look at Adani Transmission.
Adani Enterprises, Mr. Chockalingam.
Sorry. I'm
okay. You're referring to Adani Enterprises.
I stand corrected. I haven't looked at Adani Enterprises.
Okay, fair call.
Yeah,
sure. Well, but I think the same logic as I was speaking yesterday might hold true for Adani Transmission. Just the valuations, just so steep for Adani Transmission as well. Let's wait and watch. But Adani Enterprises, you're right, Pradeep. Numbers optically, the operational front looked okay.
Yeah. Jay, have you looked at the charts? Any technical view?
Sure, Pradeep. In fact, I would say Adani Enterprises clearly seems to have broken out from a symmetrical triangle pattern on the upside. And I think it's quite a big breakout. I would say after quite a few months, I would say this kind of a move on the upside have been seen on Adani. And I think with an increase in volume, clearly buy crossover in this indicator. So I would say that on the lower side, at least for the short term, the traders can place a stop loss near around 142, 43 and continue holding their longs if they have, and one can build up also long positions targeting around 165 or so. But I think on a medium term point of view, I think Pradeep, on the lower side around 136, 35, I think are good levels to watch out for till those levels are not broken. I would say this stock clearly has shifted its trend from a sideways to negative to up. I think the trend has shifted to upward direction. I think going forward we can see this stock inching towards the levels of 190 as well, but that's in the medium term.
Okay, I want to ask Hadrian about the MSCI inclusions, but we'll just have to do that post the pre-market open. We'll do that in just moments from now because we are just about 25 seconds away from the pre-open session. Hadrian, stay on. Just so much more to talk about, but let's get in a small slice. Let's give our viewers a sense of what's happening across the world as we get set to start trade this Tuesday morning, 14th November. We'll start off on a mixed note. At least the indices, global indices are showing a mixed picture, and the SGX2 inconclusive, quite frankly. It's been hovering around this 10, 11, 12 point mark. Let's wait and watch if indeed that's what actually happens. The first rates don't quite matter. I think they settle down in a completely different trajectory eventually. You probably have a 5, 10, 15 point downtick on the Nifty. Similarly, about a 50, 60 point downtick on the Sensex as well. Let's bring up individual stocks. Firstly, Bharti Airtel, Bharti Infratel, those are stocks in news. Let's see if indeed they are reacting ever so slightly. Bharti Infratel could be the one that could be reacting. Let's wait and watch. No, for now, unchanged. Let's bring up HDFC because that was amongst the top contributors on the losing side in trade yesterday, and let's see if the downtick continues. I think at some point of time in the show we'll talk about HDFC. It's been having a rather weak session a number of times in the past few days, so let's wait and watch for that. And then just the three names that I thought mattered in terms of the MSCI additions. There are a bunch of small cap additions as well, but Britannia, Petronet LNG and Vakrangi. Vakrangi's been on a strong uptrend, and let's see if that continues. Britannia nudging 5,000. Petronet LNG, well, the first ticks show a bit of an uptick, and Vakrangi would be the interesting one. No, I don't think it'll be a 10% uptick, but let's wait and watch. You could always be surprised. I must add though, if indeed Vakrangi adds another 10% and if Lupin loses another 5%, Vakrangi will overtake Lupin in terms of its market cap. It is not a small mug, it is a fairly large IT company.
Yeah, that's true. But if you look at it, if you look at both the themes, pharma has not really been going through good times, and on the other hand, it's the e-commerce and e-governance which has been which have been buzzwords in India. Yeah. But let's look at what's happening to JP Group. Yesterday, the stocks went up. Today, also JP Infra and JP Associates. If you look at, JP Associates is up close to 10%, and JP Infra is also up close to 10% in today's trade so far. So that is one interesting pack really to watch out for. If you look at some other stocks, let's have a look at what's happening to Stride Sassoon, because promoters have purchased some shares from the open market. Has that really affected? JSW Steel also has given out similar reports where promoters have bought around 8 lakh shares. That hasn't traded, surprisingly. JSW hasn't moved. Patel Engineering is a stock to watch out for. There are reports of creditors now thinking of S4A to be implemented here. Well, no reaction so far. KEI Industries, I think numbers were interesting. Net profit moved up 36%. The stock is flat, not much reaction so far.
Just a quick check on the currency as well before we move on to Agam. The currency should come up on your screen. 65.30, no big movement, just about improvement. Yeah, just about 12 odd paise, so that's okay. Okay, let's take a look at what the top brokerage calls are for the day. Agam Vakil is standing by with the details. Agam, what's on your list today?
Well, I have two, Neeraj. I'm going to start off with Nomura on Yes Bank, and they have maintained their buy, but they've also cut the price target to 375 from an earlier target of 440. Reasons? Well, they are skeptical when it comes to the divergence ratio of Yes Bank. So, they say that it's difficult to assume that the bank will have solid collaterals for all of its non-NPA divergences, and the target price, that is 375, assumes a 50% divergence turning into stress. So that is something that they're factoring in as far as their target price is concerned. Moving on, we also have a call from CLSA on Idea, and they maintain their sell, but they've hiked the price target to 77 from 70. And again, here they are saying that with the sharp fall in EBITDA, asset sales will be crucial to control leverage. And they are also saying that the progress in merger is a positive, but the merger synergies will be back-ended, because of which, while they have maintained their negative stance, they have hiked their price target to 77.
Thanks, Agam, for all the updates. Two stocks, if you could look at IDFC, which is up around 10%, and Ramco Cement has opened with gains of 3.5% in today's trade so far. These two really look interesting. Well, let's see if they can sustain these gains going forward.
Yeah, I think that's the key. Let's see if they can sustain these gains going forward. But just before we move on to Jayesh, I wanted to take in that question to Hadrian. Hadrian, yeah, 4 names. I don't want a view on all 4. Any of these that you may have a view on. 3 additions to the MSCI Global Standard Index, which is Britannia, Petronet and Vakrangi. And 1 deletion is Apollo Hospitals. Do the charts indicate either a positive trend on the first 3 or a negative trend on Apollo?
Yeah, I'd like to speak on Vakrangi. I mean, it's looking fantastic on the charts, and the way the stock is moving in this higher top, higher bottom cycle. There has been another structural breakout, on the daily charts 2 days back. And definitely on, getting a projection out of the overall structural breakout, Vakrangi is actually all set to move towards the 670-675 mark. It has been constantly managing to stay above its short-term moving averages, and that brings even more strength in the overall upswing. So I think Vakrangi out of all 4, looks pretty promising for me. No doubt Britannia and Petronet are not bad either, given their chart structures, but Vakrangi, I think, will give a fast move compared to both of them.
Okay, so Vakrangi is the one that Hadrian likes. HDFC Mutual Funds has picked up a stake in at least 2 of the 6 IPOs that listed in the month of October. The country's second largest fund house added Godrej Agrovet and GICRE to its portfolio, while it exited from Pratap Snacks. Jayesh Khildani has put together the list of the top buys and sell by the HDFC Mutual Fund in last month. Jayesh, what are the details?
Morning, Pradeep. So HDFC Mutual Fund, their total equity assets now stand in excess of $19 billion, and they have a total of about 392 securities that they are invested in. Now, if you look at the sector comparison, 33% of their portfolio belongs to the financials, and the second best is industrials, which stands at 16%. In terms of the key changes that they made in the month of October, have a look at where they increased their stake in the month of October. Axis Bank Bank, they increased 1.5 crore shares. Pradeep, this was the interesting one because I remember in the month of September also, they increased more than 50 lakh shares in Axis Bank. So, in the last 2 months, net addition of more than 2 crore shares in Axis Bank. The second one, ICICI Bank, they added nearly 1 crore shares. GAIL India due for results today, 86 lakh shares added over there, and RBL Bank, Tata Chemicals added 35 and 26 lakh shares each. In terms of the shares that they reduced stake in, SBI, the PSU counter going out as much as 69 lakh shares. Some of the commodity names, Vedanta, 59 lakh shares down over there. The interesting bit in this list was Maruti. Now, 3 lakh may not look a big number, but in the month of September too, they sold about 2 lakh shares. So 5 lakh in all gone from the portfolio of HDFC mutual fund. In terms of the new buys and sells, some of the interesting names that you were talking about, the IPOs, recent IPOs, they added Godrej Agrovet 3.5 lakh shares, GIC RE also, in excess of 2 lakh shares. Edelweiss Financial and Sonata Software, surprising mid-cap IT name over there, and GSK Consumer, they added about 1.26 lakh shares. In terms of the sell-offs, Biocon, the pharma name, they sold off, their entire 2 lakh, in excess of 2 lakh shares that they had. And Pratap Snacks, the recent IPO also, they exited on the whole. And Apollo Hospitals, today also, the MSCI index, it goes out of the MSCI index, and it also went out of the HDFC mutual fund portfolio as well.
Well, and if you add November, then you might see the name of Just Dial 2 out there. I presume, Jayesh, day before yesterday is what they did. But yeah, that's an interesting set of names that HDFC has bought and sold. Principally, at the broader end of the spectrum, I thought Edelweiss stood out because these are not stocks really at cheap valuations, or at least current valuations are not cheap. Maybe 2 years, 3 years down, the valuations look okay. I mean, that's the question to Mayuresh as the pre-open rates settle down. Mayuresh Joshi Johnson, fund manager at Angel Broking. Mayuresh, you understand the business really well. Good morning and thanks for joining in. It's not a surprise that even after the run-up that we may have seen in the brokerage stroke NBFC or diversified financial services name, there are large buyers that are coming in at these levels because the growth seems to be here to stay for the foreseeable future.
Morning, Neeraj. Oh yes, and again, as financial inclusion probably still deepens its roots for an economy like India, there is every probability that NBFCs will keep on doing well. Now the argument here, as you rightly said, is near-term, medium-term valuations and the long-term outlook. So the near and the medium-term valuations do appear stretched if one goes by the historical trend in terms of what they have achieved financially. But going forward, is the same rate possible, even if one cuts a few basis points in terms of advances growth, in terms of how the overall balance sheet will look like, it is going to expand meaningfully if one really has a 3-5 year horizon. So yes, I think qualitative NBFCs will still keep on doing well. They are going to grow at a very decent clip, and as their balance sheet increases, it is not possible for them to grow at 20-25 odd %. So obviously the rate of growth will come down, but the balance sheet will still keep on burgeoning. And that is what the markets look at, good quality businesses actually increasing their moats. So yes, selectively NBFCs is something that I'll stay positive on.
Okay, Mayuresh, stay on. So much more to talk, but just minutes away from the market open, let's tell you all that you need to know to stay ahead in the session today. Eicher Motors, GAIL, Sun Pharma, Bank of Baroda, Bata and Cadila Healthcare are the large results that will come out today.
And strong results by Adani Enterprises, NMDC, Clariant Chemicals, Future Enterprises, Repco Home, Bajaj Hindustan, PNG, KEI Industries so far.
On the other hand, weak set of numbers reported by SJVN, Marathon NextGen, Dhanlaxmi Bank, Phoenix Mills and SH Kelkar.
And some more updates. Britannia, Petronet LNG and Vakrangi have been added to MSCI Global Standard Index. Apollo Hospitals has been deleted.
Bharti Airtel offers to sell 3.5% of outstanding shares in Bharti Infratel at 400 to 415 rupees per share, as reported by Bloomberg.
Khadim India is set to hit the bourses today at a base price of 750 rupees per share. The issue was subscribed 1.9 times.
Okay, that's pretty much the set of stocks that you need to know to stay ahead in the session today. Just watch out for buying that we've been talking about in the MSCI related names, Britannia, Petronet and Vakrangi, and maybe some selling to the tune of $100 million, I think is what some of the news reports seem to be suggesting in Apollo Hospitals. So I think those are the set of stocks that you need to keep an eye out for. But as the pre-open rates have settled, it seems that we'll start off on a marginally negative note. It's actually looking very, very flat. And Bharti Infratel on expected lines would be the one stock that will start off on a negative note. Again, not surprised there at all. But the broader end of the spectrum is seeing a lot of pain for the last few days for an interesting stock, GVK Power. After having a series of upticks and being locked on an upper circuit for almost their entire uprun from 12 rupees to 18.5, it's been locked on a series of downticks, 4.5% down in today's session as well. Look at that move. It's not given anybody a chance to exit either. GVK Power, very interesting there. Mr. Chokkalingam, before we thank you, a 30-second view. A GVK Power or some of the others, promising plays, but have always held promise, not quite delivered.
I mean, as you rightly said, of late it has become a speculative stock, GVK Power. They have been selling all good assets, retaining slightly weaker assets. So I would believe that this kind of stock is suitable only for the traders, not for the value investors.
Okay, Mr. Chokkalingam, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. A minute and a half or a minute and a quarter to go. Good time to get in the top trading recommendations from both our experts. Adrian, to you first, your top trading call for the day today.
Yeah, BHEL is looking weak and it's another stock that has broken from a reverse flag pattern breakout. So I think BHEL is one stock that we are bearish on with a short-term perspective, also broken below its multiple moving averages, further adding the bearish taste for the stock. So I think one can keep a stop loss of close to 91 and play for lower targets of close to 85 or 84.
2 rupees is the stop loss and 4 to 5 rupees could be on the downside. Your target, Jay, your top pick in 20 seconds maybe.
Pradeep, I would like to add one more stock, in fact, on the buy side, and that's a buy on TCS, which clearly has broken from an expanding triangular pattern on the upside. And I think in this way, the stock is likely to head towards the levels of 2900 in the medium term. I think on the lower side, 2675 will act as a very good support. So I think among the IT pack, one stock which I like from the large cap is TCS.
Okay, Jaman, stay on. We'll take in some opening thoughts post the market start, but in 10 seconds, we'll have trade for this Tuesday morning, November 14th, and we'll have a flattish start for sure. If the pre-open rates are anything to go by, don't expect too many fireworks. Maybe Bharti Infratel could be one stock, but here's how the markets have started, very, very flat. So an extremely lackluster beginning. It's probably not bad. We had a bad day of trade yesterday. Let's see if we indeed bounce back from these levels. Pull up the heat map and let's see. It should be even Stevens. Yes, it is even Stevens. Enough red and green on the screen. Not much to choose from and not enough gainers. That's the key thing that is coming out. Not a single stock above a % mark. I want to bring up two stocks on the individual stock charts. One of them is Bharti Infratel. The other one is Bharti Airtel, of course. Both of those names will come up on your screen because of the potential bulk deal. Maybe it would be happening in a few moments from now. But Bharti Infratel, by virtue of the price band that was announced, 400 to 415, and Infratel, yes, I think the block deal is done. It's 3% off. We'll talk more about it, but well, pretty much known about 3.5% stake that is anticipated to be sold by Bharti Airtel in Bharti Infratel, and that stock is down at 401. So it's in that price band. Let's see, post the deal being done, it does bounce back or no. Individual stocks, 4 or 5 that I just want to mark very quickly, and I think the MSCI additions and deletions quite prominently stand out there. Not enough gains for Britannia or Petronet LNG, but it's Vakrangi, quite frankly, that is still moving up. And remember, I don't think it's got to do with this inclusion. Vakrangi has just been on such a tear that you would have probably anticipated a bit of green in today's session as well, but 3% higher in today's trade. What's gone out is Apollo. Let's see if there is a bit of a scare there. No, not quite. So the stocks are definitely not reacting. I picked up 2 from the small cap addition index as well, or the small cap addition space as well, Bombay Dyeing and Tejas Networks, two stocks on a relatively strong uptrend, strong wicket. And Tejas Networks, yes indeed, nudging that 400 mark, good going. Bombay Dyeing about 0.5%. Last but not the least, just a couple of active movers, and I thought Repco Home Finance stood out there. It's a good start that Repco Home Finance would probably have had, because the numbers for Repco looked pretty strong. That one is up about 4.5%. Pradeep, what else?
Quite a few losers actually. Shalimar Paints came out with weak numbers. It's down 10%. You have JP Associates and JP Power losing between 5 to 10% as well. PTC India Financials is opening down 8% in today's trade, and BGR Energy is also down some 6%. So these are some of the mid-cap losers actually. You have Madhucon Project, STC, and also GVK that we discussed earlier, opening very close to the 5% lower circuit mark as well. Among a few gainers, Repco and Vakrangi that you mentioned. Other than that, you have Eveready, Sonata Software. Sonata is up 3.5%. 8K Miles has opened with gains of around 3%. GMDC, JM Financials, JBF Industries would be some more key gainers, and also Aban Offshore is moving up 1.5 to 2% in today's trade. Gati has also opened from gains of around 1.5 to 2% in today's trade. So that is how the opening really looks like. If you look at it, the index has opened with a loss of 10 to 11 points. 10,200 is the level we have been watching yesterday as well. Jay, we didn't really take your view on index. What is the most important level that you will watch out for here on?
I think Pradeep is 10,200 only on a closing basis, but because as I've been saying that the earlier two tops at around 10,140 and 10,180 approximately when I joined those, then what we find is that 10,200 is a very good support, as well as from the derivatives point of view. What we also see is that the maximum OI is at 10,200 as far as yesterday's data is concerned. So I think this level is going to act as a very crucial level going forward, and I think if this level breaks and if Nifty closes below this, then I think we can see next round of selling then coming in, which will then get Nifty to the levels of 10,000 as well. So below 10,200, a close below that opens the gates for 10,000 levels. I would say that would increase the risk for the long traders. So I would say till those levels are not broken on a closing basis quite convincingly, I would say, I think going long here would be a very prudent strategy, and I would think that it would offer a good risk reward, because on the upside I agree that 10,300 and 400 levels also have seen a good amount of writing as far as calls are concerned, but then a bounce back till those levels cannot be ruled out, and going short at those levels will in fact increase the risk reward, not at these levels. So I think for the short term point of view, for an intraday point of view, or for a day or two, till 10,200 levels are not convincingly broken, go long on markets targeting 10,300.
Vakrangi is up 5% by the way, but the stock that I wanted to ask Hadrian about is Infratel. By the way, just want to mark that bulk deal. Multiple shares have changed hands, and Bharti Infratel is now 3.5% lower, nudging that 400 mark. I know it's a difficult one to trade, Hadrian, simply because this has gone down because of a bulk deal and not really because of a news trend. But would you trade Infratel or Airtel, for that matter even Idea, which has corrected post the numbers yesterday quite viciously, and adding on to the pressure today to down about a couple of percentage points?
I think Infratel would be the one that I would actually choose on if you'll give me an option, because if you see there is a double top kind of a formation which we've seen in the month of July 2017, and also corroborates with January 2016. So these two tops are pretty close to the 404, 403 levels. So I think definitely these would be good levels where one can actually accumulate. Of course, there is this big bulk deal that has happened, but if you leave that thing apart, then I think good levels where one can enter Infratel and play once again for an upside target of close to 420, 425. Risk reward seems to be pretty much in the favor, because the fall has been pretty sharp in the recent past. So a bold call would be going long at these levels and play for an upside target of 420, 425.
Okay. Yeah. Mayuresh, what's your view on Jet Airways or the aviation pack in general, you know, Jet in particular has gone up to hit 710 odd levels this morning, quoting with good volumes once again, although no significant gains. But the stock moved up over the last few sessions. What's your call here?
So again, Pradeep, I think the positive momentum in terms of how they've reported numbers probably playing on the prices. But you look at how the cost structure is stacked up for a lot of these aviation stocks, almost 25 to 26% in terms of the contribution comes in from the ATF prices. Add to that another 10 to 12% in terms of lease rentals. Add 8 to 10% for parking charges or the airport regulatory charges that they need to pay out. 15 to 16% in terms of the maintenance charges, 8 to 10% for employees, and 10 to 12% goes in for other expenses. So a large component is largely going in towards expense calculations to the tune of almost 85 to 90 odd %. So it leaves very, very less cash flow in terms of managing, and this business always has the added element of capacity additions. So the capex and the opex elements do remain high. Yes, I think the EBITDA performance in terms of RASK, which is the revenue per available square kilometer, and the cost if you adjust ex-fuel, I think the yields thereof look better. Q3 again will be a relatively better quarter for aviation companies. So the trading or the positive momentum for these stocks will continue. But if crude stays at elevated levels that you're probably seeing at this point of time, my own sense is that there will be a hit on the EBITDA margins going forward as well. So I think it's a momentum kind of a play for at least a few weeks. I think you should probably look at equations post Q3 in terms of reported numbers.
Mayuresh, just a quick thought on Repco. If you track that, the numbers looked fairly impressive. Asset quality improved as well.
The numbers are impressive, but to a large element, again, I think I really need to stack up in terms of the key parameters. Yes, the advances growth can be quite stupendous for a lot of these housing finance companies. But largely, again, I think how the margins and the spreads are going to pan out vis-a-vis the asset quality pressures that these companies might face going forward as well, because it's a mix that you're probably talking at this point of time. The company is probably having exposure to the residential part, still seems to be shielded in terms of asset quality pressures. So a large extent, I think Dewan Housing is something that I've continued to like, so with the whole rating on that continues. Nothing taking away from Repco, I think brilliant set of numbers, but the valuation stack probably still in favor of Dewan Housing at this point.
Mayuresh, take a moment to thank you for joining us today on the show. Good having you as always. Adrian, before we thank you and Jay, just a quick thought on Repco Home Finance. That's arguably the stock of the morning at the broader end of the spectrum.
Yeah, Repco Home has been, falling constantly before, the results that came up. And we've seen very strong momentum in the past 2 days. I think this momentum will carry forward. Volumes have been, gaining in terms of the way things are happening around the stock. So I think short-term perspective, we could see stock moving towards the 650 mark as well, if you have a little bit of patience, because the stock is trying to make a comeback, and comebacks, might take a little time.
Fair call. Hadrian as well as Jay Thakkar, thanks so much for joining in today and giving us your thoughts as well. Indians will continue to flock to movie theatres, making multiplex companies a good bet for Morgan Stanley's Swanand Kelkar, the man who advises about $3 billion worth of investments into India. He believes that Netflix can't take away the excitement that a movie theatre offers. Speaking to us in our special series Alpha Moguls, Kelkar listed out the sectors that excite him and the ones that he would stay away from right now. Listen in.
So we like multiplexes as a broad theme.
There are only 2 listed ones.
Exactly. So we like that. We like that space. I think the key thinking there is that it's an experience now, going and watching a movie. It is cyclical, I understand, and content has a lot to play. Content has a big role to play on how multiplex stocks do. So that is one theme that we like.
If I may just interject out here. So I'm one example of somebody who off late has not bothered going to a multiplex, because I don't mind seeing a movie unless it's a pot boiler 2 months down the line on an Amazon Prime or a Netflix or any of the others at the convenience of my bedroom with my headphones.
Absolutely.
Is that a threat?
It is a threat, but keep in mind that you're at the top of the pyramid, right? The Netflix subscription in India, along with, let's say, the data that you will consume to watch, is quite steep. It's not cheap. You'll probably be able to watch 3 full-length movies at a good multiplex on a monthly Netflix subscription plus data for one movie. So you preserve or you like to watch it at your convenience, but not everybody is doing that. It's a very top of the pyramid thing. So as I said, multiplex is a content cyclical sector. You need good content for multiplexes to do well. They can't do on their own, because at the end of the day, they're a pipe connecting the content and the consumer. Yeah. They're only as good as the content is or the consumer sentiment is. So it's one space that
you're bullish on. What about content creators? Balaji's entered into this deal with Reliance. There are a bunch of others which are lining up. I mean, Mukta Arts and the works as well. Do you like the content providers?
So the content creator has been a bit of a difficult area for us to bet on, because it is like betting on fashion, right? You don't know what does well. So there is so unless somebody can show a consistent hit ratio on content, it's very difficult for us to get engaged. And today, many different media for content delivery are getting explored. I think that market is not yet settled. We don't know what is going to win in that market as yet. I mean, is it the consumer subscription-led model? Is it the advertiser-led model? Is it a combination of two? You can make great content, right? But at the end of the day, you need to make money on that content. So I think I'm waiting and watching. I don't have a clear answer on that space yet. But multiplex and some of the broadcasters is where our media weight is currently.
Okay. What is looking like, to your mind, a dark horse? Again, not from a 6-month perspective, but from a 2-year, 3-year perspective, where you believe earnings growth is not being priced in by the market, and if there is anything that you are anti-consensus right now?
Sure. So what we have started building in our portfolio in terms of positions is in the pharma sector. So we were underweight pharma for the longest time, have remained that. And within pharma, what we are doing is trying to steer clear of companies who get a lot of their revenues from the US markets. So within pharma, you have this opportunity to pick domestic pharma growth, right? And it could be diagnostic companies, it could be hospitals, it could be companies which primarily cater to the domestic market or the emerging markets, and stay clear of the US exposed companies where there are clearly headwinds. And unfortunately or fortunately for us, all these companies are getting painted with the same multiple because they are pharma. And we're getting opportunities there to probably get into positions which will deliver 2 to 3 years out maybe. So we are increasing our weight in the pharma sector, cutting our underweight there. The one thing where we have been anti-consensus is that we have stayed away from the insurance sector as a whole. All IPOs we have ducked, we have not subscribed because we have found them to be really expensive. They have been sold as a financialization theme, as financialization of savings. But we have found better ways to play that theme through some of the other stocks and sectors that I mentioned.
And you can watch this entire interaction at 10:30 a.m. tomorrow on Bloomberg Quint.
Let's have a look at the markets. Repco Home is up 9% now. It gained another 5% after a gap up of 4% that we had seen already to begin with. So that's an interesting stock really to watch out for. What is also moving up in today's trade, some of the stocks would be Vakrangi, which is still up by 4.5%. You also have Minda Corp that has moved up by 4%, and ITD Cementation is another interesting stock that has gained 3.5% by now. Sonata is up around 3.5% in today's trade so far. So these are some of the interesting stocks that have been moving up in early morning trade, though index also recovers and is up 17-18 points now at 10,245 is where we really see it now. With that, we slip into a short break, but coming up next, we discuss M&M stellar tractor sales with Group CFO V.S. Parthasarathy.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people. Welcome back. This is Indian Open. The company we're speaking to this morning is M&M. July to September has turned out to be a good quarter for Mahindra & Mahindra, with the automaker posting a 25% growth in its bottom line. And driving these numbers was a consistent rise in its tractor sales. October, though, has turned out to be slightly different, with monthly sales registering a drop of 10% or so. So, is that just a temporary blip, or have tractor sales petered out? Joining us to take us through the numbers of the previous quarter and the road ahead, we've got M&M's Group CFO V.S. Parthasarathy. Partha, good morning. Thank you very much for joining us here on Bloomberg Queen. It was a good quarter, mostly buoyed by tractor sales, also buoyed, of course, by sales in your utility vehicles division, and also characterized a little bit by higher input costs, which you passed on to consumers marginally. What is this current quarter looking like, and the rest of the year looking like from where you sit?
Thank you. Last quarter, both auto and tractor did very well. In fact, auto top line grew 16%, and the PBIT, which is the segment result, grew about 28%. So that was a very good quarter for auto. But of course, tractor did very excellently, with the bottom line growing at about 38% and a top line growing at 30%. So it was a great quarter for both. But your question is, what is there going forward? As you know, Menka, we don't give guidance, but let me talk about the industry. The second half, the industry for tractors is slated to go at 12 to 14%. We had earlier given a guidance for the industry, which is about 10 to 12%. So the industry body has upped its overall growth for the year to 12 to 14, which augurs well for the second half. Similarly, UE is seeing traction and growth. And overall, the PV market for the year will grow in double digit, is now the industry's forecast. And we hoping both on tractor and auto, we will do as well as the industry does, if not better.
Partha, can I just read out some numbers to you? Correct me if I'm wrong, and I'm just looking at the trend right from the month of July, which coincidentally was also the month that GST was introduced. So I'll go back a month before that. In June, total tractor sales growth was about 9%. In July, it fell to 7.7%. August, it rose to 22%. September, 49%. And then in October, it seems to have registered negative 11%. To me, this looks like restocking in the trade, and substantive restocking all the way up to August, September. And finally, October seems to be the real test of demand. Is that the right way to read that? Is demand as strong as these numbers suggest, or is this just the destocking, restocking impact? And actually, for the rest of the few months, we might not see such high growth numbers at all.
Okay, so this is one of the things one has to read very, very carefully. And you're right, Menka, we have to look at the future with a realistic band always. But just for tractor, you got to kind of see the season and the festivities. If you look at last year, the festive season were in September and October. In this year, this festive season were all centered around Q2. So therefore, in a sense, when 49%, we were quick to point out in early October that please understand this 49% has also got a base effect of last year where it didn't have full season. So better is to look at September plus October put together, which kinds of makes the overall stocking levels as well as the season impact come through. So if you add September and October, you will see that it's a very robust growth, and that's a great thing. When it comes to October, for the industry, if you read that figure, yes, you are trying to look at a last year which had a festive season, so it looks to be relatively low growth. But I would look at it as an overall good measure and a little discipline in the industry, that they are not trying to just build to get an year-on-year growth, but it is reflecting reality. So I'm bought for both factors. And going forward, that's why the yearly numbers have been increased by the industry, because they see there will be a good second half growth. We had a first industry group, if I remember correctly, 15%. So they are saying, okay, second half could be very close to double digit or a little higher growth than that. So that's broadly the prognosis. So and I won't worry about October sales being low. It is part of a September-October season and festivities, forecasting, demand balancing.
Okay. No, the festival calendar is a point well taken, Partha. That's exactly the lens we use to look at the October auto sales numbers as well. I was just curious to know whether there is, the big swing up in numbers was mostly because of restocking, and whether we could expect that growth to sustain. But anyways, can I ask you a question about inventory levels right now at dealers? Are they where you normally would have inventory levels? Are they higher than, average? And I don't mean the average of the last 4 or 5 months, because those have been distorted by GST, but I mean the average over the last few years.
Yeah. So we have followed a disciplined approach, and I can first talk about M&M here, then talk about the industry. We've been disciplined here. Where we said that our retail should be more than our billing. In a sense, that leaves the stock intact and in the right place, not too much and not too little. Where we have followed this discipline, that has also helped us have dealer stock. So if you'll ask me at the end of October, are you comfortable with the dealer stocks? Is there overstocking? I would say that M&M is right where it should be. It's about the right size. In fact, in October, there was a little bit of discussion whether the industry is overstocking. But broadly, M&M is very, very comfortable where we did. Our norms are exactly where we want it to be. Coming to the industry, by and large, industry has been fairly disciplined in this. There may be 1 or 2 players who may have to do some corrections either way. But otherwise, overall, the industry has been reasonably balanced in this area. But for far as M&M is concerned, I can confirm to you we are very comfortable at the inventory level. It is absolutely where we want it.
Would comfortable mean that you're at average inventory levels as you would normally be over the last, let's say, average over the last few years? Is it a little bit more than that? Is it a little bit less than that?
Yeah, so a little bit less than the last couple of years average. And we want it to be between some 4 to 5 weeks of inventory at a right level, as I call it. We are very much in the comfort zone here. So that's what I meant when I said we are in the right inventory stage.
Okay. Your margins have done very well. You've seen, in fact, a growth in margins. So I'm not sure my next question will be a current worry, but do you think it might become a concern over the next few months? I think the fact that we're seeing raw material prices go up, you've passed on a wee bit of that in the last quarter, both in tractors and in auto. Do you expect that pressure to increase given how commodity prices have climbed? That's one part of my question. And the second part is on the pricing end of your products. Are you expecting considerable pressure to come in there as well?
Two parts. First, your question was around commodity prices and ability to pass on. In the last quarter, or last first half, as we mentioned in our press conference as well, in auto we've been able to pass on most of it, and it was about 1% in auto. In tractor it was a little higher, and we passed on some, and we hope the next price increase we can take somewhere in Q3. So we would have come on even keel. Commodity prices have firmed up, and therefore we would expect a similar kind of inflation on commodity prices in the second half as we've seen in the first half. So one of the things we are seeing is passing on that price increase. So it's always an art and it's not a science that you pass on excess. So it's a question of how to balance demand growth versus price increase, but we hope to be able to do it. And if you see, our contribution margins have remained consistent, and what we have got is the productivity of the expenses as the revenue grows. So therefore you have to balance the revenue growth so that you can do some bit of productivity gain in the cost structure, and contribution margin you manage by making sure that the demand is still robust. Now coming to going forward, our ability to manage margins, because we've had always a pressure of competition, and therefore neither it cannot be said that there will not be discounts. But given that the tractor industry has been very disciplined in terms of how it manage the environment, our competitive environment, I'm reasonably confident that there is competitive pressure, but there is no rogue elephant in the room.
Okay, which is good to know. Mr. Parthasarathy, good morning. Neeraj here, this side, also joining in the conversation. Just one clarification that I wanted. When we spoke to a couple of your peers, while they were hopeful of a good Q3, they were not as bullish as you are about a good Q3. So is this because you may even gain market share as opposed to just pure play sales growth? Or you don't think that will be the case? You would believe the industry at large could grow in the same vein and as M&M will grow in Q3. I know you mentioned about the industry growth, but there is a bit of a dichotomy between your commentary and the commentary that came in from a couple of your peers.
Yeah, so two parts to that, Neeraj. Thank you. I mean, the industry going forward, the second half, I talked about that industry has increased tractor industry growth from 10 to 12 was the earlier commentary to 12 to 14, and I'm using industry figures. Okay, so we are both talking of the same thing. Q3 has got the base effect of season of the previous year. So I would balance that with the demonetization impact in Q3 last year. Okay, so therefore I think in balance there would be a good going forward Q3 and Q4 for the industry. That's my assessment. The growth may not be as high as Q2, but overall if you look at H1 and H2, I believe that there are positives which are happening. And I'm also basing my positive comment not just because industry just thinks it can do well. Look at what's happening in terms of macro events which will help it. Good monsoon, two in a row, and I think that augurs well. A government which says I will do bank capitalization, which of magnitude never heard before, and an 80,000 kilometer and Bharatmala, all of them, and rural market has started to kind of feel that pulse. And whenever rural comes to play, then there is a lot of benefit for it. And sometimes the commentary from a tractor company or company like us, who are more are rural based in a sense, there is positive commentary coming from those kind of people. And don't remember that we have learned product launches both in auto and in tractor, and you would see a driverless tractor in the next 6 months to a year from M&M. So those are all the things which keeps excitement going both for us and for the farmer and the rural community.
Okay, fair call. No, just a bit of a rewind that I did for getting that clarification. Thanks for that. Just a two-part question rolled into one. This is the non-tractor businesses. One, will a slight discomfort in autos that you had periodically, I will not attribute it to one quarter over the other, but if you look at the last 7 or 8 quarters, there have been periodic spots of trouble, if you will, that you've encountered. What's the outlook for the second half there? And what about consolidation of businesses? You tend to do that with a bunch of yours. I mean, you've done that with the auto component business as well. Would the agri business see that too? Because you have a very large agri portfolio. Would all of that get consolidated within EPC or outside of EPC? And can you give some clarifications thereof?
Yeah, good. So, when you look at auto segment, we always have had a great run and also intense competition. So it is but natural that we have some very good quarters and some not so good quarters. But I think the current run seems to be very consistent when we got right things in place. We got some product launches that we had done recently, which is about KU 100 next and TUV 10, which is at the high end of the platform. We are looking at 2 more launches coming in. So there are a lot of excitement in the auto side of various things. What is also coming to is the two-wheeler is turning around the corner, and it has got recently merged into M&M, and the Q2 results had it. The third thing is that the truck business, which kind of is gaining momentum, and the HCV, we sold 1,000 plus in the festive season, and that gives a lot of confidence that even the truck business is started to do, and that adds to the top line, but more importantly it adds to the margin and the profitability as well. So there are a lot of positive things on that front from the auto, and in terms of providing a small commentary. Coming to your next question about agri and consolidation, yes, like auto components, we put all the businesses together, which is what eventually was known as Mahindra Forging. Recently we had the logistics play, which became an IPO, and that came out very recently. In agri, what Neeraj we have done is, earlier there used to be very small businesses lying across various places, okay? So we consolidated all of them and put into a full-fledged company, which is a subsidiary of M&M called MAPL, Mahindra Agri Products. And this company, now Agri Solutions, is a single company having all the businesses except for EPC. So EPC is a listed company, so we left it as it is. Other businesses we are considered into MAPL. These will all come of age, and then there are various permutations and combinations which are possible. So if you are asking over a medium term to long term, will you list agri? That my intent is that every business must test itself in the market, and therefore as a philosophy we will be asking all businesses to look at listing one point of time or the other. And Pawan did mention that we have $5 billion businesses which is looking at. I would say, yeah, we will look at $5 billion businesses, and I will ask them, when can you lift? So I'm looking for exciting time ahead, even from a listing point of view, but not next 6 months or next year, or the next 5 to 7 years.
Which one? What are these 5, Partha? Agri, yes.
Yeah. So yeah, agri, there is things like Powerol. We talked about what we can do with our CV business, and there are a couple of others. I mean, I'm not recalling offhand what are the other ones. So I'll give you some other examples. Okay, one is insurance broking in the Mahindra Finance side, our financial sector side. Then there is rural housing finance, which is also from the finance side, and such like gems which are lying out there. Our one other business in the international which should see $1 billion sooner than later is Mahindra USA. So it will be our first manufacturing $1 billion business in US. So things like that.
I'm sure, Partha, you've done a quick back of the envelope calculation. What is Mahindra's stake valued at and current values in all of these $5 billion businesses?
Yeah, so most of these, because they are unlisted, we tend to be very high in terms of percentage, so that when we go to the market, we can still be they can still be a subsidiary, and then we can still do a listing. So for example, Mahindra USA is 100% owned. Mahindra Agri is mostly owned except for what we gave as preferential issue to some of the employees and ESOPs that we gave out. So by and large, these businesses today will be captively owned, majority-wise, except for employee shareholders. And then when we'll go to market, we have value creation opportunities.
So what would the stakes cumulatively
That's where
be
we
worth?
are, Menka.
What would the stakes cumulatively be worth is what I was trying to get a sense of.
Yeah, Menka, what is said, the beauty is in the eyes of the beholder, value is in the eyes of my investors. So how can I double guess with
just some indicative numbers so that we know what kind of...
So I would say today, whatever the listed company, Menka, that if I just add them, yeah.
Go ahead, sir.
So what I said is we listed logistics with about $500 million as market cap, right? So that could be an estimate for we to do. But each of these businesses will have very different multiples. So it's very difficult to hazard a guess. And I for one, I'm the checks and balances guy. I for one don't want to hazard a guess in that direction. But logistic could be a good example, Menka.
All right, we'll use that as the measure. Thanks very much this morning for joining us, Partha, and for taking us through what the next few quarters look like. So there's a fairly encouraging, enthusiastic view of both the tractor space and the auto market for Mahindra coming in from V.S. Parthasarathy, their group CFO.
Yes, indeed. Moving on, though, Apollo Hospitals is the other one. It reported a 13% jump in the September quarter numbers, beating street estimates. The company did register healthy gains in the segmental revenue as well. In fact, to help us decode the earnings further, joining us on the phone line is Chief Financial Officer A. Krishnan. Darshan is here, who tracks the counter closely to take the conversation forward. Darshan, over to you.
Good morning, Mr. Krishnan. It's been a strong quarter for Apollo Hospitals this time around. Give us an indication of how the various clusters have performed in this quarter and which are the new hospitals that have been commissioned and consolidated into the second quarter numbers.
So you're right, the quarter was good for us. Firstly, versus Q1, we saw good recovery, broad-based in patient volumes across in Q2. Patient volumes increased by almost 15% in Q2 over Q1. And even the EBITDA over the trailing quarter was a 31% growth over Q1. And of course, over the last year, if you look at it, I think across both the existing and new hospitals, we have seen growth. Exceptional has been the new hospitals. We have not added any new hospital now in this quarter. Overall, the growth in new hospitals has been 37% on revenues. Existing hospitals have grown 6%. And overall, the healthcare services itself grew 13% over last year. So we have seen a good growth overall broadly of 13% in healthcare services. Standalone pharmacies grew by almost around 23%. What we report is net of GST, which in fact earlier was net of VAT. And since GST is 12% versus VAT being 6%, the growth is showing as 17% on standalone pharmacies. Whereas if you normalize for GST, the growth was actually 23% on standalone pharmacies. So the standalone revenues have also grown 13% on back of both the healthcare services and standalone pharmacies. The cluster-wise growth has been good across. As I said, we have now versus Q1, we saw almost 600 more beds getting occupied across our company in Q2.
Okay, can you give us an indication of Hetero Pharma as well as Nova Hospitals?
If you look at Hetero this quarter, we have seen a good performance in Hetero also. And broadly, I think Hetero has now got consolidated into the standalone pharmacies. And I think you should now look at it as part of the overall standalone pharmacies now, which is really doing well. We added over 190 new stores in this half year in standalone pharmacies, which is almost as much as what we added the whole of last year. We are trending towards getting to 3,000 stores by the next 6 months to 9 months on standalone pharmacies, and the margins are also 4.3% now on standalone pharmacies and a 15% ROI or ROCE. So clearly it is a very good, it's doing well, the momentum is continuing. We think beyond this also it should continue. Nova is now part of Apollo Health and Lifestyle, which is consolidated by us in our numbers. And that again, we saw good 28% growth in this quarter compared to last year, same quarter in the overall AHLL numbers. EBITDA losses are coming down. We have said that, in Q1 we had a 28 crore EBITDA loss for all of Apollo Health and Lifestyle business. It's come down to 23 crores. And we are on track to get it to break even in the next 18 months.
Okay, Mr. Krishnan, what has been the growth in the Chennai, Hyderabad and other clusters?
So we look at it as Tamil Nadu now because Chennai doesn't represent, because now we've really become quite pan-India, and if you look at Tamil Nadu, we look at Tamil Nadu, AP, Telangana, Karnataka and others. So, the growth in Tamil Nadu was over 6%. AP, Telangana was almost around 19%. Karnataka was 15% and other clusters were 41%.
What is the occupancy level currently, and has the company taken any price hike at any of the hospitals?
No, we have not taken any price hikes as of now, and the bed occupancy rate is now 69% across.
What is the capex pipeline of the company, and by when can we expect majority of the capex to be over, and also what are the modes of funding?
Most of the capex is behind us now. We just have the last hospital, which is that global cancer center that we are starting off in Chennai, which is which is the proton therapy center also. That will come in next 1 year or end of next year is what we are expecting that to come. But otherwise, most of our capex is behind us, and this probably the balance capex for us. This is probably around 300-400 crores. That's all it is. Our debt now is 2,700-2,800 crores of net debt or gross debt, and we don't think our debt should go up any longer from here at more than 300 crores.
Okay, my final question is, with newer beds coming out outside the main metros, do you believe that this put good pressure on the margins as pricing power won't be very strong?
No, we don't think it should be a problem. In fact, most of that has already been added. So it's not that it is going to be added. Your question would have been relevant had it been added now. It has already been added, and most of that fixed costs are already part of our P&L. So going forward, we should only see a betterment in the overall top line into the next year and EBITDA. So if this year EBITDA was flat, Q2 to Q2, if you look at it, our EBITDA is 221 crores this Q2 versus last year same time also we did 221 crores of EBITDA. But what you should remember is this new EBITDA that we have in this year is after absorbing the stent cost of 10 crores, after absorbing GST higher input costs of 5 crores, after absorbing the New Bombay loss for the quarter of 10 crores. So almost 25-30 crores of costs have been absorbed, and then we have come ahead and given you the same 221 crores EBITDA as last year. So clearly, if you were to look at it differently, the EBITDA would have otherwise grown by 10 to 12% if you were to normalize for this. But going into next year, we think we should be able to, basis volume growth and occupancy, show a better EBITDA growth once you get into FY19.
Okay, many thanks, Mr. Krishnan, for speaking to Bloomberg Quint, and all the best for the quarters going ahead. With that, it's back to you guys in the studio.
Thanks a lot for that, Darshan. So that's Apollo. That's okay, but the markets are the bigger news because they're just not doing anything within their individual components are moving around. OMCs are under a bit of pressure. The new kid on the block, Khadim, will just start listing in a few seconds from now. Do watch out for that one as well.
Lower yourselves.
Right here. I think the pre-open rates or the discovered rates suggest a small discount to the price. So that's not a happy hunting ground. Remember, 2 days in a row now, we've had two listings or two new listings which have started off with a discount. This one not as bad as the insurance company yesterday, but still 4% of a discount will not sit pretty well with investors. So not a great start for Khadim India. And one thing that we must mark are the 10-year yields, which are now inching up, knocking on the 7 mark.
We are now over 7%, something we were watching closely. Not a dramatic move, but a landmark, milestone worth marking. So the 10-year in India is now 7% and higher. We can try and bring that up on, I think we're out of time, so we should hand it over to the FNO show.
Yeah.
I'm sure they're going to talk a little bit more about it.